Boy, oh boy, do we got a lot to talk about. I just made a big play on Google. We're going to talk about it in just a second. We're going to go through the Google earnings report. We're going to go through the AMD earnings report. Right now, AMD is taking a total crap after hours. It's down 7.6%. We're going to break down why it's taking a crap. I'm bearish on AMD. I think you should be bearish on AMD too. And Google stock is mooning after hours. It's up 5.89%. The move that Google's making after hours, it's totally justified. I made a big position on Google. Maybe you can too after you watch this video. You'll get conviction in it. We're going to break down the Google earnings report. We're going to break down the AMD earnings report. And by the end of this video, you're going to understand why Google is a better investment than AMD. I'm going to break down all the fundamentals side by side, and we're going to be able to do a comparison of each one. And then as we're doing that side-by-side comparison, we're going to go into my $850,000 trading account. I'm going to show you the play that I just made on Google, and I'm probably going to make thousands of bucks on this play. It's just another day in the stock market, another day I'm making a couple $1,000. So heading over to Earnings Hub, we're going to talk about Google first. So I really like Earnings Hub. You know, if you just type in earningshub.com, you come to this page right here, and there's a bunch of different earnings that you can see are going on, and you just click on them. So Google beat earnings by 14.5%. AMD right here, earnings was flat with expectations, and revenue was a slight beat, but it's not as good as you think with AMD. AMD actually reported pretty bad in my opinion. We're going to go through that in just a second, but Google totally blew it out of the water. I really like the earnings, and that's why I made the play on Google. I sold some put options on Google, and I'm probably going to open up more positions on Google. I feel like it's a good entry right now. I feel like it's pretty cheap, and I feel like it's definitely underappreciated in the stock market right now, and that's when I like to buy stocks. And you guys know that I'll only buy stocks when I get them at a discount. I need to have a good margin of safety. That is my number one rule. So we're going to head over to my Discord. I do earnings updates every single day that a company reports earnings. So we're going to start with AMD first. And Lisa Su, she is the CEO of AMD. She said there is huge demand for compute. So what does that mean? That means there's a lot of demand for the AMD products, but the problem that I have with that is they just meet on earnings per share. Just think about it. If there's so much demand for your product, how did you just barely meet on earnings per share? Why did you not blow it out of the water? Because if there's so much demand for everything, all you got to do is just go raise your price, and these people are still going to pay for your product if it's really that good. That's pretty much what Nvidia did, so why is AMD not doing that? I really think that the demand for the AMD products is not as strong as what they're actually saying. And then on guidance right here, they did miss a little bit on guidance, and you guys know my number one thing with earnings is guidance. How do the companies guide going forward? What do they think the company is going to do in the years to come? And that's what I said right here. Guidance is key, and Wall Street was looking for a blowout, and the blowout did not happen. So what AMD guided was they expect a 22% year-over-year revenue growth. So don't get me wrong, 22% year-over-year revenue growth, that is great. But we're talking about a company right now that is saying there's unlimited demand for their products. Why are you only growing revenue by 22% year-over-year? That sure doesn't sound like unlimited demand for me. So this is how I break down my valuations right here. So currently AMD is trading at $153 per share. That is the after hours price after the big dip just happened. So if you add all four of these up together, your total trailing 12 months earnings per share is $3. So now we're going to get the PE ratio. So we're just going to go divide 153 by 3, and we're going to have a PE ratio of 51 for AMD. Now that PE ratio of 51 is trailing earnings. So those are earnings that already happened. Is that good? Is that bad? In my opinion, it's not horrible. I mean, a company is growing revenue at 22% year over year, but I think that it's a little bit high. I think for 22% revenue growth, this should be closer to 40. But we're going to go into Google in just a second, and I'm going to show you why I like Google so much more, because we're going to compare how AMD reported versus Google. And it's going to be pretty obvious that Google is probably the better bet. And this is also why Google is pumping after hours right now. So if we go down right here, earnings per share in the same quarter last year was 70 cents. Right now it's 92 cents. Remember, they just reported 92 cents earnings per share right here. So when you divide that out, that is a 31% year-over-year earnings growth. So not bad. 22% year-over-year revenue growth, 31% year-over-year earnings growth. But here's the deal, and this is what I teach in my course. How do you value this stuff? So if the earnings growth was 31%, and you guys know the number one thing that moves the price of a stock in the long run is what the earnings do. So if earnings went up 31%, we would expect the stock to go up roughly 31% too. But in the last 1 year, in the same time period of the 70 cents versus 92 cents, the stock went up 64%. So the earnings went up 31, but the stock went up 64. So it does appear that the stock went up a little bit too much. The stock outran what the earnings growth was. So that's why I said it's overvalued and it outran earnings. So my final word on AMD right here was I'm staying away from AMD. I'm not saying you won't make money, but I like Google better. And now we're going to dive into Google and I'm going to explain to you why. So now we're back over here on Earnings Hub and Google reported $2.12 per share. They were expected to report $1.85. So that is a 14.59% beat. So here's the deal with beating earnings. When you beat earnings, you're just beating what the analysts were expecting. You're not necessarily beating what earnings were last year. So for example, just pretend a company reports like $5 per share last year and they report $1 per share this year. Great. They went from $5 a share to $1 per share. That's a huge drop in earnings. So we should expect the stock to fall quite a bit in the last year when that happened. We get that. But what if they were expecting $1 per share and they report $1.50? That's technically a 50% earnings beat. So they went from $5 a share last year to $1.50 right now. It's still a huge drop in earnings. But what the typical news reporters are going to say is, oh, company XYZ, they beat earnings by 50%, and then the stock will probably pop. But the reason why you have to understand what the analysts are expecting is because there's this theory in the stock market called the efficient market theory. So what that means is the current price of any stock is reflective of all future earnings, all future knowledge of the company. It's all priced into the stock right now. So basically the true intrinsic value of the stock is already reflected in the stock price. So really nobody has an edge. The market's efficient. There's no inefficiencies. There's no company that's technically undervalued. There's no company that's overvalued. All companies are just valued appropriately. Now, me personally, I do not believe in the efficient market theory because I feel like I always find deals in the stock market. I like to buy things when they're on sale. I like to buy things when they're out of favor. That's why I made a trade on Google a couple days ago that I sent out in Discord. And look what happened now. It's totally printing cash. Google is pumping after hours and we made a bunch of money on that. So if we head over to my breakdown for Google, I said they totally smoked earnings, which they truly did in my opinion. And I did say a few weeks ago that I feel like the stock is cheap. So Google right now is trading at $180 per share. So these are the last 4 quarters of earnings right here. So if you add all this up right here, the total trailing 12 months earnings per share on Google is $7.54. So if we divide the current price of $180 divided by $7.54 of earnings per share, we're going to come out to a PE ratio of roughly 24 on Google. So just comparing the Google PE ratio of 24 versus the PE ratio on AMD of 51, we could see that Google is cheaper. So on my AMD breakdown right here, you could see that AMD grew their earnings at 31% year over year. They went from 70 cents to 92 cents. That is a 31% gain year over year. But if we go to Google, in the same 1 year time period, they went from $1.55 to $2.12 right now. So they had earnings growth of 37%. So they had more growth and a cheaper PE ratio than AMD. So this is why I like Google a lot more than AMD. And another reason on top of that is how much did the stock move on Google in that same time period. So AMD grew earnings at 31%, but the stock went up 64%. So the stock of AMD, it went up way more than what the earnings growth was. But if we go down to Google, Google's earnings growth was 37%, and it just so happens that in the last 1 year, Google stock went up 37% also. So it's justified. It makes sense. So that right there is personally why I like Google a lot more than AMD. This is how I value stuff on a basic level. In my course, I go way more into depth how to actually do this stuff, the nitty gritty. But as a broad-based overview, this is a couple of the reasons why I would much rather own Google at this price level right now versus AMD. All right, so let's check out my account super quick. So $852,000. Look at this 6-month return. This is not me adding money to it. This is the power of just investing in companies when they're undervalued. That's straight up all I do. $305,000 I made in 6 months. True profit out the door. I did not add any money to this account, and that's a 55% gain. Of course, I can make a higher percent, but there's no point in making a higher percent. I mean, I made $305,000 in 6 months. That's not bad. And the way that I do it in the stock market is I make a lot of my money with stock options, and the way that I do stock options is this. I like to hit first and second base hits all day long. I could go up to the plate, I swing, and I usually hit the ball and I make it to base. But you'll see these people swing for home runs every single time, and usually swinging for home runs means that you're buying call options. And think about it. When you buy a call option, you need the price of the stock to go straight up in a short amount of time. Because number one, when you buy options, the time decay goes against you. As these contracts get closer to expiration, the contracts are worth less money. And on top of that, if the share price doesn't pretty much go straight up, that's going to eat away at the value of the contract also. So that's why call options are kind of like lottery tickets. I will buy calls from time to time when I have a crap ton of conviction, but I don't do those all the time, to be honest with you. The bread and butter for me is selling puts, because if I sell a put, if the stock goes up, I make money. If it goes flat, I make money. And if it goes down to the strike price, I still make money. Even if it goes below my strike price, I still make money up to the premium that I sold that contract for. So that's what I'm talking about with the first and second base hits. Selling puts for me is first and second base hits. I could pretty much do those all day long. But when you buy calls, that's where you're swinging for home runs. Sometimes you get the home run, but a lot of times you'll strike out too. All right, so let's dive into my account super quick. So this trading account is $785,000. I have a couple different accounts in Schwab, so this one is $785,000. Total gain loss is $289,000. The reason why this is lower than what I showed you a little bit ago is because this is of the positions that I currently have open right now. I have other positions that I opened and I closed, and that doesn't get reflected in a gain loss. Also for cost basis. Cost basis is only for the positions that you have open. I did not send $490,000 to Schwab. I sent under $100,000 to this account roughly 5 years ago, and now I have over $800K. I mean, $100,000 to $850K in 5 years, that is a killer return. I'm not saying every year is gonna be killer, but the way that I do this stuff, I really think that I cracked the code to the stock market. Check the links in the description below. I'll teach you how I do this stuff. So you can see I have a pretty big position in Triple Q, $456,000, VOO $280,000 almost. Sold some puts on the Qs, sold some puts on Apple, sold some puts on the Qs again. Microsoft, IWM. Here's the Google play that I did a couple days ago. So I sold some puts on Google. I received $7,257 in premium credited to my account immediately. So I got this $7,200. It goes to the cash balance in my account. Then what I do with that money is I take this $7,000 and I just go buy more shares at the base of my portfolio right here. I mean, it's pretty much like clockwork. I'll sell the put, I'll take that premium, go buy more shares, rinse and repeat the process. And before you know it, your portfolio snowball is going to get so big, it's going to be like, how the heck did I hit my first $1 million? And that's honestly how it went down for me. I hit my first $1 million roughly 1 year ago, and I just crossed the $2 million mark too. I mean, the first $1 million took me 5 years to get there, but the second million came not even a year after that. So it's totally crazy the power of actually trading in the stock market the right way. Because don't get me wrong, so many people get smoked out with options, and I get that, but if you learn how to do this stuff the right way, I don't care if you do my course or not, go do someone else's. You just have to educate yourself. That is my number one thing. If you get anything from this video, understand what you're investing in, understand why you're investing in it, understand what happens if it goes up in price, understand what happens if it goes down in price. So the Google play right here, I have a strike price of $145, expiration date of 9/19/25, and I'd really expect this contract to expire worthless. Google is showing strong earnings growth. The price is cheap. It's trading at a PE ratio in the low 20s, and that is the PE ratio for the trailing 12 months. Going forward, it's probably going to get even better because the earnings are going to expand. So that's my breakdown for Google and AMD. I think that AMD is kind of blown out of proportion. I think that AMD is kind of like riding on the NVIDIA hype, but AMD is not NVIDIA, and that's what people need to understand. So they shouldn't price it like NVIDIA. They shouldn't have the high expectations like they have for NVIDIA. NVIDIA pretty much rules the world right now, and rightfully so. All these companies, they want NVIDIA chips. They want to build out all their AI computing stuff with the NVIDIA chips, and I get it because it's the best chip. And if you don't invest in AI right now, you're probably going to get left behind. But AMD, in my opinion, just does not live up to all the hype, and Google, in my opinion, does. Honestly, Google a couple months ago, I was getting a little bit nervous with it because I was going to make a trade on it, but then I'm like, man, I use ChatGPT all day long. Like, is that going to put Google out of business? But now guess what? Go on Google and do a search. Right there on the top of the Google search, you're going to see Google's ChatGPT version right there. So it's kind of like, I don't even need ChatGPT as much anymore because Google just incorporated that right into their Google search. So I hope this video helped you guys out. If you want to learn how I trade stock options, I'm going to put a video right here for you guys. Click on that one, and I'll see you in the next one.